demand is not really the problem. I think what the issue that we're seeing with oil markets now is there's been an increase in non-OPEC plus supply, which I think has surprised many people, including from the shale industry in the U.S. I think there's some questions how much that can continue. A lot of it was, efficiency gains and maybe, some private companies taking advantage of prices to increase production. So there's that aspect of it. And also I think what OPEC Plus is trying to do is address what would normally be a time for lower demand in the first quarter and raising of inventories. Although the inventories have been dramatically lowered, so it's all relative. But I think unfortunately, I think the narrative, the economic narrative of the economy is still trying to figure out if we're going into a soft landing or a hard landing or whatever, and that influences people's views, especially in the macro investing circles, of lower demand. But if you look at physical markets are quite tight. Yes, there's more non-OPEC supply, and we have some spare capacity now thanks to the cuts that Saudi Arabia has largely done themselves. But I think once we get past the first quarter, we're going to be again in a very tight market. I think the one thing we have to watch is this non-OPEC supply and what happens there.